Well, thank you for joining us. I'm Marlon Bowling with you as we watch your grain and livestock market action here on the Market Day Report. We're going to be talking with Brian Splitt of Allendale Incorporated right now on the phone, and we have a kind of a slow market here, Brian, to talk about. The corn and soybean markets haven't moved very far today. We had a little weakness here in the wheat trade. I wanted to get your thoughts on what we're seeing here. It looks like a lot of positioning maybe taking place here ahead of the reports coming up Thursday morning.
Yeah, this market's in go nowhere fast mode right now. It seems like every time I look away from the screen and look back, it's within a penny or two of 350 for December corn. We do have November soybeans back to the upper end of a trading range that we seem to be bouncing back and forth. We find support in November soybeans in the low 950s, and we seem to be finding resistance in the upper 970s. So, maybe a good 20 to 25 cent range. The wheat market right now revisiting its uptrend support. And, there's relatively low volume across the board and just not a lot of excitement out there today.
I'm hearing some mention of concern about dry conditions in Brazil. Can you elaborate on that?
Yeah, so the Brazilian producer, they want to see a nice rain before they get their crop in the ground. So Brazilian soy planting is roughly about 5.6%. That is lagging last year. And, that'll continue to bring concerns for the major users of soybeans. And the longer that it takes for them to get the crop in the ground, that will just potentially add some additional export demand to our U.S. soybeans to fill that pipeline in the meantime.
Now, looking at Argentina, isn't there also talk that they may actually opt out of some corn acres and put in more soybeans in favor of them? So there's some similar stories there, too, because going into Brazil as well, there's also some talk that they may abandon some of their corn plantings and plant additional soybean acres. So, we're going to have to keep an eye on some of these planting intentions, how they may change over the next several weeks, because that will influence the availability of product as we move forward into the winter months. And so if we have less corn available from our South American competitors, then hopefully we could get a little bit more demand coming our way in the winter months when things are usually ho-hum. So will USDA be taking a stab at what they expect for Brazil and Argentina corn and soybean production for next year in this report yet, or is that going to be down the road a little bit?
We're going to see some world numbers on the report. So this is basically going to rehash the quarterly numbers that we just got from the USDA on September 29th. Effectively, those numbers are the old crop carry-in into the new crop. So that'll change our new crop estimates accordingly. And then we'll see if the USDA adjusts the yield for corn and soybeans domestically on this report. They can potentially adjust demand as well, and then we will get the world production estimates out of the USDA in this report as well. So, several moving parts. And hopefully we can get some kind of numbers to miss the mark a little bit and provide some volatility here.
Let's look at that corn again in the soybean trade. For latest trades here on the corn on December, we are currently trading 1 penny lower at $3.49 even per bushel. On the soybean trade, we have the November contract now trading 2 1/4 higher. January up 2 at $9.85 per bushel. And in the Chicago wheat trade, well, we have a lot of weakness there yet. 5 1/2 lower on December at $4.38. The cotton market, let's jump over there and catch that December. We have it trading 22 points lower now at 68.62 cents per pound. We'll be back talking more with Brian Splitt of Allendale when we come back right after this. We are talking with the birthday boy himself, Mr. Brian Splitt of Allendale Incorporated in McHenry, Illinois, and so glad you could join us on a very special day here, Brian. Thanks for helping to celebrate with our audience all across the country. I want to talk about this livestock trade. We had talked about
a higher open on the live cattle and feeder cattle trade to start out the first couple hours today. And then the last update that we had, everything was kind of taking a nosedive here in the cattle. Let's see if they have managed to stabilize or not. Let's look at the live cattle first. And if we go to the big board in Chicago on live quotes here, let's take a look at October. Still 36 higher at 111.38, so it seems like they have acquired a little buoyancy here. We have the December contract, 28 higher. Now last trade at 117.20 per hundredweight, so they firmed up a little bit from our last update. February now 20 higher at 120.92 per hundredweight. On the feeder cattle side, as we switch over there, with the softness in the corn market, it's not making a lot of difference in the feeders. Of course, the corn isn't moving much. We have October feeders down 17 now at 153.78 per hundred, and November up 3 at 155.78. We have come off of our earlier high, though, by roughly about 70 cents now, Brian. January up 20 at 153.90, but same story, off of our earlier high by about a half a dollar there. Have you heard anything on the wire this morning as to why all of a sudden we saw some weakness creep in there about a half hour ago?
You know, not yet. And to be honest with you, I wasn't really looking for it. I think really the buying early this morning, we had the bears on the ropes late in the week last week. We closed, right on the highs for the week. And the October contract had gapped higher this morning, reports of some 110 trading late Friday afternoon. But, we've managed to run right up to some resistance. We had a high during the month of September on this October contract of 111.82. We traded up to 111.65 here early this morning, and now it's kind of sitting right where it had opened this morning. So some of these back-end contracts have definitely backed off their highs quite a bit, and I would venture to say that they, ran some stops, ran some of the short-term bears out of the market after making some new highs above the September monthly high. We need to maintain these gains, otherwise the cattle market could be vulnerable to, I would say, a $3 to $4 setback to get down to some good support.
We had heard that some of the deferred contracts had new contract highs this morning. That wouldn't necessarily be a good sign if they would turn around and close lower on the day, would it?
No, that's right, and it's not a bearish thing to make new contract highs, don't get me wrong, but anytime you push through a resistance level and you fail to close above that, that could be a sign of knocking some participants out of the market, and they could be very willing to jump right back in on some weak closes here.
On the lean hog trade right now, we'll pull up those futures for everybody here. Let's take a look at the big board. October down 20 at 58.98, and December down a dime at 60.82. The deferred's just narrowly mixed over there, so not a lot going on in the hog trade. Do you think that's going to be the way we see it for a couple of days yet?
Well, we're going to have to shore up the October contract with the index. Early this morning, we had the October trading about $4 above the index, and we've seen that before, where there's that disparity between the two. So either the futures need to come down, the index needs to come up, or likely a combination of the two. I've been focusing on this April contract around 72. Just over the last several years, 72 roundabout has been some very good resistance, often leading to pullbacks down to the low 60s to upper 50s. So I've been encouraging producers that are looking at April timeframe that they haven't done any activity yet to get something done there, whether it's getting some contracted sales or getting some puts on, or whatever your method is to manage a risk.
Brian, good to visit with you. Thank you for all the information. Brian Splitt is with Allendale Incorporated. He is based in McHenry, Illinois. And Christina, we are going to be watching that hog trade very much through the day, and even the cattle market. Signs of a possible reversal.
From Friday, especially.
Could be critical today.
Interesting. Okay, thank you so much, markets editor Marlon Bowling.